Welcome everyone on behalf of the Boston Blockchain Association, welcome to the vidcast. I'm Mike Wise, and I'll be your MC for tonight for our third virtual meetup. Last time we covered innovation and regulation. Next time we're going to be talking about digital identity. And tonight the topic is digital currency, CBDC, and payments. We've got an excellent panel set up for you all. Remember that the Boston Blockchain Association is a member-driven organization, so please join. You can find the Become a Member button on bostonblockchainassociation.com. I'll put the link in the call to action button at the bottom of the website at the end. And so you can also find on your interface a button for questions. So as we're going through the vidcast, please enter your questions. You can also vote on those questions, and we're going to deal with the most popular questions first. So I'm going to introduce Jeainny Kim. Jeainny is a blockchain enthusiast and a new member of the Boston Blockchain Association Board of Directors. Jeainny, welcome.
Thank you, Mike. Thank you for the lovely introduction. And thank you, everyone, for joining us today. My name is Jeainny. I am the moderator for you today for the panel. So just to give you a brief overview of what we'll be seeing today is Miko Matsumura. He is the co-founder of Evercoin. We'll be speaking first on the future of crypto and CBDC. Moving forward, we have David Markley, who is the director of business solutions at Algorand. They're doing this really, really cool project of giving Marshall Islands their first national digital currency. It's really groundbreaking, and we'll be asking him questions about that, and also the more real life trends of what's happening. How the global appetite for Algorand's technology is forming throughout the world. And last but not least, we have Thomas Arul. He has a really great presentation prepared for us on a real life use cases of blockchain and crypto. And it'll be good. It'll be a great time. So I'm glad you guys are here. So I guess just to start off, I'll start with Miko, ask him some questions. Miko, you ready?
Yeah, of course.
All right, sounds good. So I saw, I saw your previous interviews and your presentation at the Barcelona Trading Conference in 2019.
Yeah.
And I saw that you spoke a lot about the extraction economy and how, we right now, because of the whole AI optimization, we are in a very serious extraction economy where value is being squeezed from all of our workers. So in a macro sense, when all these companies begin to reach the peak of extraction, what's next? Like when companies like Facebook and develop their own currency, Libra, where does open source money go from there?
Yeah, absolutely. So one of the things that's super obvious to everyone right now is COVID. And so COVID-19, people are sheltering in place. What's happening, right? What you're seeing is unprecedented unemployment, right? And the thing that's shocking, I think, is a great many of those jobs are probably not coming back, right? So one way to kind of reason about this extraction economy thesis is kind of Andrew Yang may have had it right with universal basic income, because this notion is that, AI technologies are automation technologies, right? And what's happening is that, across all industries, whether it is inherently mineral extraction, like literal petroleum mining, hydraulic fractionation, oil mining, whatever it is you're pulling out of the ground, increasingly computerized technology is being used to optimize that. But then it moves to industrial extraction through robotics and factory. But now we're moving to the attention economy, where AIs are targeting advertisement and extracting the economic value of our attention. And we're really reaching this kind of absolute pinnacle of that, right? But the thing that's really impactful about this from an economic perspective is that this level of automation means that economic activity is occurring essentially sort of without a whole bunch of people that were working, and so now they're not working. So this is a pretty drastic impact. It's a pretty negative impact, and the thing that's really interesting is that people are pretty upset, right? So the political milieu is kind of showing kind of anger, and that there's a lot of angry people that are out of jobs, and it's a very upsetting time for a lot of people. I think rightly so. So the question becomes, how do you look at these phenomena, and how do you look at blockchain technology in that context? So I just want to quickly kind of bring the blockchain into it, because I talked about AI as being basically a promoter of wealth inequality. Right, which is really interesting. Whereas if you look at blockchain and cryptographic assets, think about something like Bitcoin, right? Bitcoin, the best way I found to explain Bitcoin lately is it's the bank of the internet owned by the users, right? And so the idea is it's a bankless bank. And because it's a bankless bank, it means that there's no profiteering, right? It means that the profiteers are actually the users, and that all the profits going to the users. In that sense, it's more like a credit union of the internet rather than a bank of the internet, in the sense that the users are the owners, right, and the beneficiaries, right? But why is that an important lens? I think it's an important lens because essentially what AI is sort of taking away, blockchain seems to be providing, right? Blockchain actually, I think that it may be a tall order to kind of think about blockchain as a force that can potentially implement something like a UBI or something like addressing problems of wealth inequality. But I can tell you that, in some sense, I kind of feel like I'm coming through a time machine, right? Most people that do kind of Bitcoin price predictions and this kind of futuristic forecasting, like, it's all kind of rubbish because like nobody knows what's going to happen. And by the way, this history today hasn't been written. But what I can tell you is I've been watching open source software for the past almost 30 years here in Silicon Valley. And I can tell you the way open source software has played out is, to me, a harbinger of how this open source financial infrastructure or open source money is going to play out, which is, it's inevitable, and it's going to basically, there's going to be zero significant organizations, whether they be huge companies or governments, in the case of CBDC, that are going to, they're all going to benefit, right? It's benefit or die, right? You're going to actually get lower cost infrastructure for financial services, or you're not going to be competitive. Like, why would you be competing against open source when it's free? So, it's just a bad idea. So that's my brief commentary. I don't know if you have follow-up.
Yes. So thanks for explaining that. So it seems like, you've kind of explained your thesis of open source money will, eat all money, right?
Yes. Yes.
So when you're in your timeline of open source money eating all money, where are we now? And do you how fast do you think we'll be adopting, or how fast do you think it'll take for open source money to win out? And you also mentioned that open source money cannot be controlled by the government. So when you have private profiteer companies creating their own digital currency, and you have open source money, open source digital currency, do you expect that one will win out over the other, or is it possible to coexist?
Yeah, I think coexistence is necessary, right? And I think the thing that becomes important, because as we can see, we've got guests here on this panel that are working for effectively kind of private organizations, but they're either sort of benefiting or they're directly contributing to open source financial infrastructure and blockchain. So to me, that's really how it's worked in open source software in general, right? Which is that everyone's a beneficiary. If you look at things like what happened to proprietary software. So if you look at open source software, proprietary software continues to exist. And in fact, the proprietary software companies are actually larger and more valuable than they've ever been at any period of time in history, right? So, but the majority of the code, the lines of code that they ship is open source software, right? So what's happening is that the center is hollowing out. And really what's happening is infrastructure services are being delivered effectively for free, right? So there's a zero cost infrastructure. And what happens is it forces competition to go up the stack, right, towards the user, right? And that's exciting. So the answer to the question of where are we is we're actually at the early part. Because if you remember the birth of the consumer internet, right, what we saw the birth of things like TCP/IP and low-level protocols, FTP, eventually HTTP, right? And then you had this guy, Mark Andreessen, who was kind of working at NCSA, and he worked on this Mosaic browser, which became Netscape, right? That was kind of the so-called Netscape moment, right? And the thing that's fascinating is there's a variety of user interfaces being developed on top of things like Bitcoin, and other coins. And these interfaces are going to represent the wallets and as such browsers. Evercoin is a similar type of a thing, right? So I think we're ahead of the Netscape moment for the Internet of Value. So we don't really have kind of this universal browser for this medium as yet, because we still have serious problems to solve, user experience and user interface problems. Oh, I think your mute jumped on for some reason. There you go.
One sec.
Yeah, that's good. I can hear you now.
Okay, perfect. Yeah, so when you say that we still have issues with user experience, do you mean like not everyone? Do you mean like a lack of access or lack of like integration, like nationally, or?
Yeah. So let me just describe to you. So at the moment, what we're seeing is the protocol, and we're seeing kind of raw protocol, right? So before the call, when we were all hanging out together before we went live, we're kind of joking about kind of giving out passwords, and we're joking about kind of giving out private keys and things like that. And like the thing that's amazing is that all of us, in this entire meetup probably have a pretty good understanding of what it means to show people your private keys or show them a QR code representing your private keys. Like everyone understands sort of basic cryptography. They understand kind of public key, private key cryptography. They understand key pairs, and they understand the role of these things. That's not great. I mean, what I mean by that's not great is that's not a consumer level of UI, right? That all of us have to understand public key cryptography, or at least the basic principles of atomic key cryptography. Like we don't actually have to write new algorithms, but I mean, what I'm saying is that the fact that we need to know that stuff is bad. Like, just to give you an example that's very close to home, like, what we've done at Evercoin is we made a mobile wallet attached with a YubiKey, which is a hardware device. Mm-hmm. And the way we've kind of consumerized it is it works like a hotel key. And what happens is that it's cold storage, right? And what happens when you want to sign a transaction is you put it in and it works like a hotel key. So it unlocks when you put it in, right? It locks when you take it back out. But the private key is only transiently available in the memory of the phone for a millisecond, and then it disappears again, right? And so it never goes to the disk on the phone, and the idea is that you go from cold to hot and then back to cold super fast, and the reason why that kind of stuff matters, and the reason why stuff like being able to have a non-custodial backup of your private key matters is because all of that is user experience. All of that makes users feel comfortable with this technology, and it makes them safer. And I think that's stuff that's missing. Like we haven't figured this out universally as yet, and we just need really much kinder end user solutions for everyone. And I think central bank digital currencies will be huge drivers of adoption, and there'll be huge drivers of like increasing in improvement of the user experience. So, I think that's a necessary precondition for mass adoption.
Mm-hmm. Okay, thank you so much for answering all my questions. That was awesome. I just learned so much. Okay, well, I think those are all the questions that I had for you.
Yeah, that's good.
Move on to David. Sorry for these awkward transitions, you guys. So, David, I understand that Algorand's ecosystem is global. It's everywhere, including many EU companies. Building off of what Miko was talking about in terms of adoption, which countries do you see the fastest and the most eager adoption of your technology?
Sure. Two quick checks, since prior to going live, I was having some technical difficulties. So one, can you hear me okay?
Yes, we can hear you.
All right, great. And then two, I just want to say thank you to everyone on the panel. I love doing these, specifically for the Boston Blockchain Association. We always have a lot of fun. It's great getting to catch up with Miko and Thomas. And so just thank you at large for putting this together. We always enjoy these. So to answer your question about, blockchain is a global technology. It's a global platform. Miko, I'm going to steal some of your sound bites. I loved Benefit or Die and The Center is Hollowing. I thought those two were very categorically correct. But in terms of, the US, EU, and kind of Algorand's broader reach and goals, we endeavor to try and make this core protocol that Miko alluded to, right? We want to compact as much as we can into that layer one so that anyone around the globe can really come up the blockchain learning curve as fast as possible. Miko mentioned that these user experiences are too difficult for consumers. I mean, they're still too difficult for developers in a lot of scenarios where you're writing in a language that you've never been trained in, you've never spent any significant amount of time in. You have to write perfect code. Like both of these requirements are just insurmountable for most people. And so what we are focusing on at Algorand is really making it streamlined and easier to do the things that you want to do. Create assets, send transactions, do those common blockchain activities that we have all taken for granted, and do that at layer one and have the protocol really do a lot of the heavy lifting. And so with that backdrop, we've seen a lot of adoption around the globe. We've got a great company called Monerium. I don't know if anyone's heard of them or checked them out, but they're an e-licensed money provider. They essentially provide a host of different reserves or stable coins that institutions can take advantage of. And so again, when we talk about expanding the on-ramps from the protocol side to the economic side, you really need to be able to transact in the currencies or the mediums that you're most familiar with. And so Algorand supports digital US dollars, digital pounds, digital euro, the Icelandic krona, I believe, is a potential offering reserve. And we're continuing to build out that foundation so that not only can you take advantage of the technology, but you can also easily come into the ecosystem and the economy that we're building. So Monerium's a great EU-based company. The World Chess Organization, that's one of my favorite projects that we've worked with. They're doing a hybrid IPO, listing their asset on Algorand, which is very exciting. It's the first of its kind. They're based in Switzerland. Silvio Micali, our founder, originally from Italy, very strong connections there with the Italian government and the Italian community at large. And then, I think independent of Algorand, we're seeing so many more people start to dive into the blockchain ecosystem. The Bank of France has issued an RFP for their central bank digital currency. The Bank of England has issued an RFP there. And so, it's very quickly becoming a global platform, and it's super exciting to be on the cutting edge with Miko and Thomas and everybody else on the panel.
Yeah, that's really exciting. Getting RPF some, these like national entities. I think that's really exciting for everyone, especially for Algorand. And I guess like Miko and everyone's aware, like the pandemic has affected kind of our appetite for technology as well, right? Have you seen a surge in, like, are people calling you more for Algorand's technology after the coronavirus hit? How have you seen any changes from that?
Yeah, it's you hate to be excited. You hate to be on the receiving side of a pandemic. My heart goes out to everyone that's impacted, and that you hate to talk about the opportunities that something like this has created. But it certainly has accelerated the thinking that a lot of governments have been doing around how do we evolve our cash management practices? If we're doing distributions, and historically we've been doing them by hand, is that really the thing that makes the most sense in a world with COVID, in a world with these types of diseases? And so, unfortunately, COVID has actually resulted in a lot of people accelerating their thinking on this topic. Anecdotally, I was on a call earlier today, and someone said that COVID has collapsed what would have taken 3 years of digital transformation across a majority of these larger enterprises into 2 months. And I'd certainly say I can support that sentiment or that concept, where there's a lot of people where this is now at the forefront of their thinking of how do I take advantage of these next generation technologies? How do I accelerate my transformation and be able to take advantage of new business models that decentralized technologies will enable, better efficiencies internally with a lot of these organizations. So unfortunately, we have seen, due to Corona, we have seen increased interest, but I would say that it's put this distributed model at the forefront of a lot of people's thinking.
Mm-hmm. Got it. And as people have this digital transformation in their minds. Among the three key areas of adoption for Algorand, which are asset tokenization, digital financial infrastructure, and CBDC, which area do you see the most potential slash also the fastest adoption?
Yeah. So just to step back and quickly define kind of those three terms for those that might not be familiar in the concepts that we're talking about. So asset tokenization, I think we've all heard about ICOs, people who talk about stable coins, but really fundamentally what each one of those represents is taking an existing construct, let's say a security or a dollar, and then turning it into some sort of asset on the blockchain. We happen to use the term token because it works, maps well to our accounting brains, the frameworks that we operate in today. But that's really what we're talking about, is just creating a digital representation of an asset or good in a blockchain network. And we see that trend accelerating at a pace that, I don't think we ever could have predicted. On the evolution, or I should say the adoption of blockchain technologies, we see a lot of companies in the crawl phase where they're just testing, they're doing proof of concepts, they're understanding how blockchain can help them achieve operational efficiencies and how they can start to apply business logic directly to their financial holdings. And so as an example, you have a board meeting or you have some committee meeting on what your new policy is going to be, what your new loan rate is. Well, instead of going out and talking to all of your vendors and your third parties and then getting them up to speed on what the new offerings and, going through trainings and very manual processes, you update the code that says we are now changing our loan terms if you meet these criteria from 7% to 8% or 4% or whatever your adjustment is. And then it's programmatically rolled out across the entire ecosystem. So we spend a lot of time working with companies to think about how they can take advantage of this new technology and really scale their operations across our network. From there, once we work through this operational efficiency, this technology advantage, we really talk about expanding your digital financial infrastructure. So how can you plug in with other companies that are doing the same thing? How can you work with someone like Thomas that has an off-the-shelf invoice financing, payment orchestration SaaS solution where if you're already operating with tokens or assets on Algorand's platform, this is plug and play. And so it's really, again, the center is hollowing, right? I love that quote. Everyone's a beneficiary because when we build on a common platform that is free to use and open to everyone, you can immediately accelerate product rollouts, changes to those products. It really unlocks a lot of really interesting possibilities. And so once you get through kind of the blocking and tackling, the creating of the assets, and then you get to expand the digital financial infrastructure that you have access to, we see all of that kind of being the next wave of evolution on top of our platform. So we see a lot of things there. I mentioned the World Chess Organization, but there's a host of other, whether they're stable coins or security tokens that are available on the platform today that people can start lending, borrowing, trading against, taking call options. It's a pretty fast evolving and very exciting space. And then the last thing that we call out separately, not because the principles are different, but because of the impact and the gravitas that this new evolution carries, is central bank digital currencies. And so I think the defining difference is actually an operational one on the back end. A lot of people get into the semantics argument around, well, how is a stablecoin any different than a central bank? Well, fundamentally, the central bank backs a central bank digital currency. And so they can go out and they can raise funds, they can issue bonds against it, they can increase the reserve, and they effectively streamline their entire economic policy, where a digital US dollar is still at the mercy of the central bank and the issuing government behind it. And so there is a little bit of a disconnect. It's more of an implementation and a practical one. But when you think about scaling these types of technologies, I think a large part of the reason why so many central banks are investigating this is that if someone gets this right and they get it out into the hands of many, you're in a position where you are the central bank of central banks, essentially, where you can start to provide services streamlined, much more efficient, at a much broader scale than I think a lot of people originally thought possible. So those are kind of just broad brushstrokes, three areas, lots of interest, and happy to kind of dive into either one of those in more detail. But I'll pause here.
Got it. Well, it seems like you and Miko both believe that, and correct me if I'm wrong, obviously, it seems like you both believe that central bank digital currency is a must-have for us to have a widespread adoption of crypto, of digital currency overall. But it's interesting because central bank digital currency it seems almost antithetical to the initial spirit of
let me kind of correct that perception, right? Which is I don't think central bank digital currencies drag blockchain technology. I think the blockchain technologies are dragging the central banks, right? I think it's the other way around, right? Which is, my foundational thesis is the inevitability of the adoption of open source financial infrastructure simply because of its cost lowering effect, right? And the thing that's crazy is people kind of I don't think people really understand the idea of cost reduction at the platform layer. Right. I think David is alluding to that in the context of, all of the applications that sit on top of Algorand, right? Which is that, the cost reduction is that every time they push an update, everyone gets the features, everyone gets the benefits, like everyone gets all the security, they get all the, so the point that they get all the performance, they get everything, right? So the point that I'm making is that in a sense that's what I guess what I'm pushing here is I'm saying that there's only two types of organizations in the future: beneficiaries of this technology, not Algorand solely, but like beneficiaries of any open source financial infrastructure, and the dead, right? So, what I mean is that it doesn't matter if you're a government or not. It doesn't matter if you're an enterprise or not. Like, you would better get in the game because this is inevitable. Because what's happening is so there's only two other options. One option is to not have a digital currency at all, right? Which is absolutely ridiculous. So now your country is no longer competitive on the international stage, right? So that's a problem. That's a bad idea, right? The second problem is to have a digital currency that doesn't benefit from open source financial infrastructure, in which case you're going to have to hire a bunch of engineers and turn your government into a software company and turn it into a software company that's probably less good at building software than open source is. So I guess what I'm really trying to say is that, like, if you want to put the cart and the horse in the proper order, it's actually the open source financial infrastructure availability, and that the blockchain isn't dependent on CBDCs. It's actually the other way around. It's that the central banks are dependent on blockchains in order to further extend their life cycle. But the point is that it's not disruption. And what I mean by it's not disruption is did open source disrupt Apple? No. Did it disrupt Facebook? No. Did it disrupt Netflix? No. None of them are disrupted. They're all beneficiaries. They're all loving it. They're like, open source is great. This is so good. And central banks will be the same, the smart ones. And investment banks will be the same, the smart ones, right? The smart investment banks will embrace this and benefit from it. And they'll have JPM coin or they'll have whatever it is that they need to have because it's free software. It's like people turning down free software are like, they're making a big mistake because free software is awesome. And if it isn't awesome yet, just wait a couple minutes and it'll become awesome. Like that's what free software is like. So, you don't fight free software.
Right.
To just reinforce exactly what Miko said, we find that central bank digital currencies, while if they, in their eventuality, right, as Miko has outlined, when they launch, they will certainly broaden the addressable market, the addressable users, the availability of this open source software. But it's an inevitability, in our opinion, where stable coins are already starting to challenge this mental model as is, right? It's forcing people to start thinking about this where they wouldn't have to otherwise. And so, yeah, I think Miko hit it nail on the head.
Okay, sounds good. Thank you for clarifying that. I guess I was under the wrong assumption that, or it just seemed like CBDC would be kind of competing against open source, but it makes sense what you're saying. It's everyone.
I think the competition is between kind of centralization and decentralization. But that's a fair competition, but it's not a competition against open source and proprietary, right? Because if you look inside of Facebook, there's both open source and proprietary working together really, really well, right? And so it's never a competition between open and closed. Those two things just work together beautifully. It's really a competition between kind of centralized and decentralized. That's the competition. And the thing that's really interesting is that if you look at things like the Jeainny coefficient that measures decentralization, it's not binary. Like there's no system that's like 100% decentralized, and there's no system that's 100% centralized. There's always hybridization, right? Because we're dealing with governments that are federal, and federal governments are like a hybrid between decentralized state power and centralized federal power. So like federation is an inherently kind of more balanced construct. So I guess what I'm really trying to say is that that's a fight that's worth having, but at the same time, I don't think it's even a moralistic or a spiritual or philosophical fight. And even when you look at open source kind of blockchain technology, you're actually going to see a whole bunch of different approaches. So for example, solving things like the Oracle problem, one of the most elegant examples of solving oracles on a blockchain is just to centralize them, and those who are kind of sort of philosophically unwilling to accept that solution are probably just not going to be able to make financial services that make sense to people. So
or they'll pay too much.
Yeah, or it'll become incredibly expensive. Yeah, that's exactly right, and therefore not competitive. But there may yet be a market for it, because there may be people who are purists who are like, no, I don't want centralized oracles.
Right.
But they seem to work.
David, do you have anything to add to that?
No, I think just to embellish, I suppose, or self-promote, because I am the sales guy after all. One of the things that we are very conscious of, and we talk a lot about at Algorand, is how do we give the sliders? How do we give the ability for the application developer, for the company, to make that decision? At Algorand, we don't want to impose any form of, I guess, you have to be fully decentralized or you have to be fully centralized. To make it a little more concrete, when you create an asset on Algorand, there's a number of capabilities that you can turn on or off, such as freezing the asset and who has the governing authority over that power, right? And so if you're a central government or a central bank and you issue an asset on a decentralized system, you might be thinking, I'm relinquishing all my power. But on Algorand, we give you the ability to have these fine-grained controls. So only these people that I nominate are able to interact with my asset. Only this subset of people, if they've been KYC'd, AML'd, whatever your credentials or your threshold is, can then take custody of my asset. And so it's these types of general controls that we build into the protocol that allow people to move across that spectrum. And I think that's why we've seen a lot of interest, and why it's very exciting to be at Algorand right now.
Mm-hmm. That's awesome. And for sure, what Algorand is doing is really exciting. In its real-time integration of what we've all heard about and what we hope to come. So that's very exciting. So for the sake of time, I do want to move on to Thomas's presentation. Thomas, do you have your presentation ready on screen?
Hi, Jeainny. Thanks for meeting. Hope you get our screen shortly. It was a fantastic panel. Thank you, David. Thank you, Miko. I can't believe Miko has 30 years of experience. From the picture, it looked like he started working at age 12. David, again, nice to hear from you on Algorand. So again, first thanks to the Boston Blockchain Association. Even during this pandemic, they are hitting out of the park by conducting these events. Fantastic, thanks again. So my name is Thomas Arul. I'm a CEO and co-founder of a Boston-based startup on blockchain. It's called Bleumi. Our focus is on the digital payment on the blockchain side. So I'm excited to share my screen. Can you see my screen, Jeainny?
Yes.
Okay. So our focus is on the payments and payout for CBDC as well as digital currencies. So I think when Miko said about usability, so one of the first things that led me create the payment product is when I first started in the blockchain space was we created a product and we're trying to do the payment part. Then we have to come with a MetaMask to pay. I have to pay with stablecoin. I still need to have Ethereum to pay. Then the whole usability was very confusing. That led me to say, okay, let me focus on this problem of payments. And that seems to be a bigger problem than I wanted to solve, but it's amazing with the response that we're getting with our product. So a few slides on CBDC. So we have a product called Bleumi Pay. which is an all-in-one global digital currency platform. As you know, blockchain is quick, secure, global. There's no chargeback. We do payments across multiple devices, website, mobile, point of sale, email. We also do payouts. Once you receive the payment, you need to send payments to an employee or third party provides. We help in the payouts. Also do microtransactions. Some of the key requirements of CBDC is that countries are trying to build a CBDC platform, but once you build the platform, you want people to use it. So that's where we build a product to help countries and people to adopt the blockchain technology as well as the CBDC payment. So our platform is non-custodial. You know what happens in traditional system? There's always a middleman. When you send them money, there's a bank or intermediary exchange always trying to take a cut of it. So when we build a product, we want to be non-custodial. So the flow of funds goes from the customer to the merchant directly without anyone touching it for a very few transaction fee. And also zero block confirmation, you want to do near real-time payment and also handle all the payment exceptions in traditional payments, as well as have no time limit. So we are on blockchain and we support some of the major blockchains in Algorand, Ethereum, XDAI, and Libra in the future. So one of the platforms is that as soon as someone introduces a stable coin in any other platform, then automatically we support it. Like, you know, now Tether was introduced in Algorand, automatically we support Tether in Algorand. If there's any other new digital currency initiative done by any country on a specific blockchain, we'll automatically support that. So we support multiple blockchain. We are blockchain agnostic, and we support some of the common stable coins in the marketplace like Tether and USDC and Paxos, and hoping to support Libra in the near future. So we are partners with Algorand, and the good news is that 80% of the central banks are looking at blockchain for digital currencies. I know we know about the Marshall Island project where they're using Algorand as a basis for implementing it. As you all know, Algorand is proof of stake, quick, secure, and fast. And also one of the things is that in a blockchain initiative, there's both the public and private part. So Algorand with the feature of co-chain kind of bridges both the stuff. And as we have done transaction Algorand, it's super fast and the cost is very minimal. So some of the use cases that's going to happen in a digital currency payment is you need to accept payment. You know, countries need to have systems that accept payment. Either it's e-commerce, point of sale, or sometimes the legacy systems, you know, want to adopt such a way that not only they can accept the digital credit cards and other stuff, but also start accepting digital currency. Then the other whole 9 yards is that enterprises, you need to do payrolls, pay your taxes, also pay your vendors. So not only countries have to look into rolling out digital currency, but also make sure the systems to support accepting of payments, sending payouts, and financial services as well as microtransactions. So our product does some of these things, and that's what we're really excited that not only we can support stable coins, we can also support CBDC initiatives by countries. So quick drum roll, please. So what? Okay, hope you can hear that. So we are really excited being a Boston-based company, and Boston Blockchain has been very instrumental in promoting the Boston the ecosystem of blockchain, not only in Boston, but across the globe. So we launched Bleumi Pay on BBA website. Right now, you can go to the BBA website, become a member, as an individual company or a student, and pay using digital currency. Right now, we support USDC. In the future, we'll support more digital currencies as they come to us as they're launched. So again, we as a company paid a membership using USDC. It's very simple. So I would like everyone to check it out. Go become a member, try it out, and it makes sense because being a Boston blockchain company to adopt blockchain as well as use blockchain. So a couple of things before I part out is cash was a king. Now it's dirty. I think people want to avoid cash. And one other thing is that it's very expensive to have a central bank print and manage digital currency, especially small countries. Like the island, when they want to adopt digital currency, they have around 1,000 islands. So how do I print and distribute cash across 1,000 islands? So it makes sense for all these small countries to start with going with CBDC, and slowly the big countries are going to follow. And cross-border payments are very painful and expensive. As I've done a lot of money transfers across the globe, there's always a huge chunk of fees going to the middleman. I think with blockchain and CBDC, I think that we can eliminate the middleman and save a lot of money. And one of the challenges that billions of people are unable to access even the basic financial services. But with smartphones and technology, you can get a smartphone for $30, $40 in Asia. So this is going to be hugely, though they might not go to a bank, but at least they'll be having a smartphone with their country's currencies to pay for transactions. So that's a huge, huge leap, and we're going to cross the bridge very soon. So CBD is the answer. In my take is CBD is not the future, it's happening today. And you can contact me through multiple ways, and you can always check out as Bleumi in Twitter. Thank you.
Wow, is there a sound effect for clapping too? Well, that was a great presentation. Thank you so much. And I do agree. I personally do agree that CBDC is one of the most logical solutions to all of the financial infrastructure that's going on, especially with how fast the world is changing. Could you tell us more about like how you see Bleumi? Like, where does Bleumi fit into national adoption of CBDC?
So first, I think what we're doing is, as a platform, we support some of the major blockchains. So like, we support Algorand now. Algorand was launched Tether launched in Algorand, so automatically our platform supports it. Then now we have, as David said, a couple of countries like Moderator launching some stable coins in Algorand. We automatically support it. So if any country starts using Algorand as a blockchain and bring their digital currency, we'll automatically support that. So we'll support that from a point of payment, so the people can go and pay in the website, mobile, kiosk, as well as not only the payment side, we have functionality to do the payouts. So you want to send all the employees' payroll, you want to send your taxes, you want to pay your vendors, you can invoice and pay. So all this functionality we are building as a company to support these platforms.
Mm-hmm. And for, especially in terms of payroll and all these kind of human relations related transactions, how do you deal with the legislation for those?
Yeah, so the good news is that a country is going to go adopt this specific digital currency. Like, so if country XYZ adopts it, then the people in the country will be looking forward to getting the digital currency as a payroll. So how do you do that? So there's going to be a wallet for each individual, and the government has to do payroll processing. And finally, we'll have a small plugin. Okay, we'll plug into a traditional system to send money to the digital person's digital wallet, not to the bank account. So that's the future we're looking at. That's the future we're working towards.
Mm-hmm. Gotcha. So this is more of a which comes first kind of question, like egg or the chicken. But it's great that people can get paid in Bitcoin. They can get paid in digital currency. But what happens when the infrastructure isn't there for that person to spend that money readily?
That's a classic problem with the adoption of digital currency.
Right.
Stable coins, I think people are using it for hedging against Bitcoin and Ethereum and stuff. But it's very hard to ask people to use Bitcoin or Ethereum or even stable coins to purchase, especially when Ethereum, the transaction cost is so much, it doesn't make any sense. But when a country adopts a specific CBDC, there's no option for all the people in the country have to start using that, So they'll slowly phase out their physical cash. So they'll slowly adopt the digital currency. So you can go pay for your coffee, pay vendor, all through your digital currency of your country. So adoption is going to be far faster once the country adopts it.
Gotcha. So once the country adopts it, it just makes sense that everyone will start using this digital currency. That makes a lot of sense to me. Okay, well, now it's the portion for Q&A. I'd like to open up the questions for everyone, all the panel speakers. So except for certain questions I think that are pretty pointed, I think, if you have an answer, please feel free to jump in. The first question is, could you, so this is more to Thomas and David, could you give us more details about the Marshall Islands CBDC?
Yeah, Thomas, I'm happy to start. There's a lot of detail to be had. So in terms of background, the Marshall Islands have been working on legislation for several years. They're actually working with Peter Dittus, who's former economic chair of the BIS, and working through many different iterations of the legislation. That ultimately culminated in them passing law that said that they were going to be, the country was now going to be accepting digital currency as the new standard and the new medium and the new form of payment. So they have mapped out a kind of economic transition plan. Shortly thereafter, their technical team started on a hunt across all of the different blockchain providers, different blockchain platforms, and they had a whole host of criteria. To briefly summarize, they were looking for the technical capability, so speed, transaction finality, throughput, things that we're very proud of and what we've built at Algorand to accommodate all of those requirements. And then on the flip side, they were very interested in what the ecosystem looked like. How could we, day one, if we were to issue this currency, what would be available to us? And so having great partners like Thomas to say, there's an invoice platform that's plug and play. It supports every asset on the platform. There's institutional, custodians that support every single, we call them Algorand standard assets. And so it's a protocol standard that, as Miko outlined, the center is hollowing as we collapse the complexity and we have a common standard that everyone can use. All of these different ecosystem players can just provide services that are globally accepted and adopted. And so that was a big selling point for the Marshall Islands and for SOV, is that Algorand is, we are very active in trying to build out that ecosystem. And so there's some more detail. If you're looking for more specifics, you can check out the white paper. They're going to be kicking off a series of rolling auctions to introduce the actual currency into the market. Happy to kind of go in more detail after the panel if there's interest.
Thank you. And all of this information, personally, I was able to find, or a lot of this information is available on the website as well for people who are interested. Okay, so the next question is, I think this is for Miko. It sounds like you believe that the first CBDC will quickly become the central bank of CBDCs. For example, the world's currency. Is that your position?
So I do believe that absolutely there will be incredible competitive advantage conferred to first movers in this space, right? And I think one of the contenders for this at scale would be People's Bank of China, which is the largest central bank in the world. And one of the things that's very true about their central bank digital payment solution is that it's tied closely with their Belt and Road initiative. And it kind of mirrors the expansion of what the United States did kind of during this, effectively expansion of this paradigm of debt, right? So really what happened in the Americas is the United States established this kind of concept of third world debt. And it essentially established, institutions like the Bretton Woods and then subsequently things like IMF in order to kind of manage debt restructuring, right? But what you're seeing happening with China and their central bank digital payment solution is that you're actually seeing a more software-based approach where they're basically installing their software in central banks across through Belt and Road, right? So that you kind of have an instant reconciliation across a blockchain ledger that enables you to kind of manage essentially debt, and it's debt for building out kind of real world infrastructure, literally roads and, infrastructure, in these countries. So, I do think there is a competitive advantage in technology if you're the platform that has, the first shot at ubiquity.
Wow, great answer. Also kind of scary, knowing that, it's both digital depth and physical dominance over other countries by China's Belt and Road Initiative. So that's a little scary. But, moving forward, for David and Thomas, do you guys have anything to add to, or what is your take on this world's currency, this topic of world's currency?
Thomas, I think you're muted, but it looks very insightful. I'm sure it was on point. Why don't you go ahead?
Can you hear me? Yeah.
Yes.
Sorry.
Yes, sir.
I think stable coins are a temporary pass. I think once countries start going digital, then, if US has a digital dollar, then stable coins are not going to be the preferred method of payment. So I think once a country adopts digital currency, it's going to be saving a lot of money for them. It makes sense for small countries to do immediately. Don't waste time. And also we are in the game of building the infrastructure for the day-to-day transactions of these digital currencies. So we're really excited about the opportunity, and I think it's a long game, and we really seeing a lot of traction for countries, want to do this quickly.
Yeah, and bringing it all the way back to the top of the discussion, I think not only is it going to be who adopts the technology, but who nails the user experience, the onboarding, and the integration. If you're a user and the only choice you have is whether or not I operate in a digital currency that has a strong, track record, is not hyperinflationary, or I operate in a currency that could expose me to extreme risk where I could lose all of my holdings overnight, the choice is going to be pretty straightforward if both of them are as equal to gain and operate in, right? And so, coming all the way back to user experience, I think it's going to be not only the very first central bank that issues, but the one that makes it accessible and has the ability to back it as well.
I want to springboard off of that and talk about the layers of competition and what to expect based on open source and proprietary, which is what you should expect at the infrastructure layers. You should expect direct competition between open and proprietary solutions. So for example, if you look at the infrastructure layer in software, what you're seeing are things like operating systems in the data center. You're actually seeing things like Windows, which is actually a bit player, and then you see Linux, which is kind of the not bit player. It's a dominant player, right? And so if you look at the 80-20 in infrastructure, the 80 goes to open source, right? But when you actually kind of tunnel further up the stack, the thing that happens with adoption is that proprietary players actually get an advantage because they're dealing with UI. And infrastructure, UI is not the domain of open source typically. So what you end up seeing is players. So for me, when you talk about adoption patterns and the injection of kind of good UI, what you end up with are neobanks, right? So if you look at players like Revolut, you can buy Bitcoins. You look at players like Square, you can buy Bitcoins, right? So what's happening is that competencies of user acquisition and app development turn out to not be competencies of traditional financial institutions like banks. So traditional banks can't do those things. And so what ends up happening is that, again, you get stratification. So to me, I think in terms of the likely pattern of adoption, I think neobanks are going to be the intermediaries that catch the most users because they actually have user acquisition as a core competency. And I think that underneath, there'll be competition between open source infrastructures, proprietary infrastructures. And when I say proprietary infrastructures, even if a central bank open sources their platform, there's an element of proprietariness about it, so because, it's going to be it'd be very strange if someone forks a central bank digital currency like that. It doesn't have the same meaning as a chain split in Bitcoin, for example.
Got it. That's pretty interesting to think about, forking central bank digital currency. So I guess like moving on to the next question. This is a more economic question. Like how will CBDC affect financial assets like gold, bonds, commodities, etc.? Like, will it affect it in the same way? Well, the way I interpret this question is like, will it affect it the same way that our current currencies do, or will it be different? Will it be untethered to that / tethered?
So I'm happy to weigh in here. I don't know if it's going to be the answer that the person who posed the question was looking for, but it's going to make every facet of interaction more efficient, right? Like that. I think that's the common theme that we've been talking about throughout the entire presentation here is that, creating a digital representation on a platform where transfers are effectively free. You can plug into any payment rail at effectively little to no cost. You can atomically swap for any central bank digital currency around the world, and then also immediately settle for another asset class that you're trying to get into. I think it'll impact every single one of those industries in the same way as we're talking about it impacting central bank digital currencies, stablecoins, etc. And so, how at the technology level, it's going to be first, efficiencies gained, and then, new financial infrastructure that they can readily adopt, and then it'll ultimately kind of land into better UI, better trading. There's some complication in the physical space with how do I ensure that I have trustworthy, we talked about the Oracle problem, how do I have trustworthy inputs into this decentralized platform? And so there's going to need to be some more innovation in the infrastructure side, I think. But largely, I think the efficiency gains are going to outweigh any sort of switching cost.
Gotcha. And it seems like there's another running theme of user experience. Miko talked about like neobanks, and you also mentioned just how everyone is focused on like improving the user experience of using digital currency. Building on that, are there any plans or any offers for a platform or app that will allow us to like monetize how our data is used for digital currency?
That's a big thing, actually. So I think that's kind of a second wave issue, right? And I think it's a trailing issue, unfortunately, because what's happened is that data has become money. So, you know, one of the things that Jaron Lanier, who's one of the fathers of virtual reality, had this kind of thesis that Silicon Valley won and eventually became, like he said, we became the assholes. Right. And so what happened in 2008 is that the peak of power was on the East Coast in New York, and it was the financial industry and the banks. Right. But what ended up happening after 2008 is the power of the banks started to wane because people started mistrusting the banks. Right. But then the power of the West Coast with the technology started rising. And now you have these data banks. Right. So to me, the thing that I think is important to understand is that there's a 10-year interval between those two events. And so if you think about it that way, if you think about the emergence of banking on blockchain, right, I think the emergence of something like a true data powerhouse on blockchain, it should, you know, assuming that this wave is faster than the last, then it should at least lag by 5 years, right? Because I think the priority of people are kind of getting a transactional payment system going on blockchain, which we're kind of barely able to do already, you know. So once we have that, I think the second priority becomes identity, but I think identity actually may even travel with payment, right? So then the thing comes after identity is what you do is you actually take the same rails. So you take the same private key custody and you use that for an identity to aggregate user-owned data, right? So I think that that's the evolution of it. And I don't think that a novel, pure play data provider is going to win. I think the winner is going to be an identity provider that starts out in like financial, that starts out kind of being tied to payments. And then what happens is that that provider ends up creating a data repository that the user owns. And somehow that becomes a standard for things like advertising, right? And you know, another player that's super interesting in that domain is the Brave browser, Brendan Eich, and BAT, right? So that's super interesting because he's actually building essentially a new private a privacy preserving internet, and you know that could be where it starts as well.
Jeainny, I have a question for Miko. Miko, you know, we four of us are in Boston. You are in San Francisco. So, what do you think of stablecoins when CBDC comes? Will stablecoin still be existing, or in for Libra for chance? You know, will it still exist once CBDC when there's a digital dollar, or it's going to vanish?
Well, so here's the interesting thing, right? Which is I think that, you know, the concept of a stable coin is a funny concept because ultimately all value is relative, right? So really there's no stable coins, there's only pegged coins, right? So the idea would be, you know, what do you know, so the thing that's funny about your question becomes, is there a unique value to a coin that's pegged against a central bank issued currency if the central bank already has a pegged currency that they themselves have issued, right? So to me, I would say that it's a little bit like the speed at which arbitrage has continued to exist in crypto, right? Which is what I mean is that if there's an inefficiency to exploit, then there will be a cause for this so-called stable coin, right? So for example, if the US dollar, if there's a US dollar central bank coin that's released, right, I think that people will still continue to use USDC and Tether until that one becomes like competitive at a technological level, right? If it becomes technologically competitive, then people will look at it and they'll think, well, okay, it's good enough, right? Because at the end of the day, like, you know, it's really trust and convenience, right? So people want that whole package. And I think that in a way that the thing that has to happen is that in order for something to disrupt something else, you know, it has to be 10 times better. It either has to be 10 times more trustworthy, which in the case of Tether, it may be easy to be 10 times more trustworthy, but you know, it's or 10 times faster, or you know, better technologically.
Thank you.
Oh, Thomas, were you saying something?
No, I said thank you, Miko.
Oh, gotcha. Okay, well, I have like a couple of questions left, but I think people have already kind of brushed up on this already, but this is a question for all three people. What is the best guess on when we'll see the first major economy adopting CBDC? So major economy being like North America, Asia, etc.
I'm happy to start. By all of the information that I've come across, it feels like it's a matter of rollout strategy for the Republic of China, not a matter of technological adoption. And so for me, going back to Miko's point about how do they do this in an eloquent way where it's married to the Belt and Road Initiative. I don't think that the limiting factor here is technology. I think it is actually the wide adoption, the integration, getting everybody onto a common platform. And so if I had to guess, probably not 12 months unless you're behind closed doors, widely, kind of a promoted 24. If I was just throwing a number out there.
How about you?
I think the UI issues are much less, right? They're much less because, I think David's got a great point, around this notion that a central bank is really, the customers of a central bank are banks, right? And so when you really look at banks and bank IT infrastructure, like, it's okay, like it's reasonably secure, it tends to work, it's fine, right? So with that, from that perspective, like, rolling out something from a central bank to banks, it's less hard than rolling out something for a central bank to like every citizen, and forcing the citizens to use mobile wallets and pay at cash registers. Like, that's not what we're mostly talking about. We're mostly talking about, only a central bank launching this in order to ensure liquidity that goes to their customers, which are, banks. So central bank to bank, and not necessarily central bank to citizen.
Yeah, and for those of you on the phone, the common shorthand there is bank to bank is considered a wholesale CBDC, and then the kind of idealistic, future vision, which some central banks are actually considering, is a retail CBDC where every individual can open an account directly with the central bank, and the central bank becomes, essentially the last lender to an entire population, which is a pretty interesting, but also quite disintermediating for the bank's current customers, the central bank's current customers. In a lot of respects.
two different timescales, right?
That's totally right. Yeah, that's totally right.
But David, to your point, if this central government it's going to affect a lot of banks, no? So I don't think US is going to do some model like that where it's going to put a lot of banks out of business.
Yeah, I mean, I think Miko said it best: benefit or die, right? There's certainly a new place in this new world for a lot of those institutions, and so if you're on the rails, and then you can offer additional forms of securitization for different asset classes, or maybe by adopting blockchain, you're able to go wider, and you don't limit it to just high net worth individuals anymore. You're actually able to broaden your services to a bigger population. That those banks, investment banks or otherwise, now have a new role to play, and they actually have a larger customer base. So certainly food for thought, and they're not going to rush into doing something that's going to disrupt the existing financial paradigm. But I think it's good conversations that are worth having, and conversations that we're a part of.
Well, and I just want to underscore that the idea of an all singing, all dancing financial infrastructure is like bad reasoning about software, right? Which is that people who reason about an all singing, all dancing, all application money infrastructure are reasoning about this in probably like a primitive kind of cash money mindset, right? Which is the cash money mindset is that it says on the dollar, it says legal tender for all debts, public and private, right? So essentially the dollar is made out of paper and it's useful for every application. And therefore you can just make a software that has the same property. But it turns out that money isn't that. Money is software. And if you reason about money as software, if you go to Starbucks and say, oh, I'd like a latte, right? You can pay with a credit card. You can pay with a Starbucks gift card. Thanks to Bakkt, you can probably pay with a digital payment on a blockchain now, right? You can probably pay with a Fold app Starbucks gift card bought with Bitcoins. You can pay with cash. every single one of those payment systems, you can pay with your bank debit card. Every single one of those payment systems is a different software package. And I think the people who are criticizing Bitcoin for like, oh, it's not money, it's like, it is money. It's just an application. It's just one value store application. And if you want a single software package that's all singing and all dancing for every financial application, I think you're not reasoning sufficiently well about money. Now, what I'm not denigrating are kind of really deep consensus infrastructures that can handle multiple use cases like Algorand. Like that makes perfect sense to me. But what I'm saying is that the fantasy that Bitcoin is an all singing, all dancing financial infrastructure, it's just reasoning poorly about what the actual nature of money and the actual nature of software.
I also would like to ask, so this is the final question, given the time, given this adoption part of CBDC, the statistics are, only 52% of the world, which is over 3.8 billion people, but only 52% of the world is now connected to the internet, and about 2/3 of the world has like a mobile phone. So how like is CBDC or even digital currency at the capability to scale that much? And how can you measure true consensus when people, like, everyone can use a dollar, but not everyone can use Bitcoin? So how do you measure true consensus?
I think we're going to get there. I just want to really articulate that, like, at the moment, one of the things that's happening in some geographies are payment cards. So, even going outside of the phone system. But to be perfectly honest, if you look at the penetration of Android operating system and smartphones in kind of geographies, in third world geographies, like it's the, things like $10 Android phones. So there's definitely deep penetration of that technology. And I think the user experiences are going to be incredibly, incredibly easy. So like I'm a little less concerned about that. Although I would say that that's more of a second wave phenomenon than a first. But, I'll let the other panelists take a crack.
Thomas, would you like to chime in?
No, I think the first adoption is going to be countries that have a lot of people digital, as Miko said. The technology is leaping very fast. I think people might not have a bank, but they still have access to Android phones for $10-20. So that's going to be solved the next 2-3 years. So I don't think that's going to be a problem 3 years from now.
And I think the narrative that blockchain in and of itself is going to solve, the banking, the unbanked problem, those two narratives tend to get intertwined. I think, it's not a blockchain problem that it can really address, right? And so I think we're looking at a culmination of technologies. I lost track of, I think, Google's weather balloon idea, Facebook's satellite projects. I think, with the next SpaceX launch set to happen here in a few days, hopefully they add more, satellite infrastructure out there. But I think we're going to need some additional complementary infrastructure in order to get the rest of the world included. That being said, as Miko mentioned, there's other tactics that don't require a blockchain, don't require this connectivity to increase your user base while taking advantage of cost reduction of the blockchain. So I think blockchain's a piece, and it can certainly help, but we're a ways from having full financial inclusion.
Gotcha. Thank you for your answers. Well, we are actually up on time now, so I just want to thank everyone, all the speakers, for joining us and giving us your time. I really appreciate it, and thank you for the listeners for all those really interesting questions. And I'll now turn it over to Mike for the wrap up.
Great. So this was just phenomenal. I wish we could have gone for another hour, and I'd like to suggest that we recast this same panel, same bat station in 12 months. Quick question, David Markley, what's the timeline on the SOV? When will it be live? Is 12 months a realistic number?
Yeah, so we're hard at work on the technological implementation, and so where I can tell you the technology timeline much more accurately than I can tell you the full rollout. There are many third parties declaring and passing legislation does not issue a digital currency. So there are many other parties involved in helping integrate. There's several foundations that are being onboarded, and there's custody solutions that are being rolled out. And so while I don't have the full project picture, because there are many other entities that are involved with the SOB Foundation, I can say that they are going to be starting auctions, and the target is to have them going live before the end of the year. So again, I think it's outlined in the white paper pretty well what the economic policy and implementation plan is. But we're hopeful that we can get started here before 2021.
So replaying this in 12 months might be a good timeline. So everyone, big round of applause for Jeainny Kim. This was her first moderation performance. Yay, Jeainny!
I was sweating.
So what I heard was digital currency. You better get in the game. So Miko, from your area, your neck of the woods, Oakland A's, Moneyball. I'm sure you've seen that movie, right? Everybody watch that movie another time. Algorand. If you're not following Algorand, if you're not following Silvio Macaulay, he's one of the smartest guys on the planet and so easy to understand and talk to. So Silvio Macaulay, and then payments. Cash is dirty. That's an awesome line right there. And yes, pay with crypto. So we've rolled that out on the Boston Blockchain Association.com. Please become a member. That was a great segue. And next, in 2 weeks, we have on June 11th. So Miko talked about this as digital identity being the second priority. So we're going to have Liz Tanner from the state of Rhode Island. She's got a digital identity project that she's going to be talking about. And we're going to have Sam Nathan, who's been working behind the scenes, facilitating all the technology here. And he's a system architect, and he's a subject matter expert on digital identity. So that's going to be a very interesting conversation. The meetup page for June 11th is live. So this concludes our virtual meetup around CBDC, digital currency, and payments on behalf of the Boston Blockchain Association. Thanks everyone for joining. Thanks Jeainny, and thanks Miko, David, and Thomas. Good job.
Thank you.
Okay, thanks everyone.
Have a good night, y'all.
It's over.